Tune into ET now, and this is time for the first edition of Market Fatafat. I'm Karunya Rao, and joining me on the show are Varun as well as Soumya from the research desk. We also have on the technical Sameet Chavan from Angel Broking. Hi everybody, good morning and welcome on board. Let's kickstart the show by taking a look at the first group of stocks, really. The FMCG, the entire pack is a buzz in trade today. If you look at a Britannia, an ITC, Nestle, Titan, so on and so forth, all of these stocks are buzzing away big time in trade. In fact, what essentially is fueling this up move for the FMCGs is the fact that the market now anticipates that there could be a price reduction in select categories. We've been witnessing slowdown even when it comes to a 5 rupees biscuit packet. At least that's what the management had flagged off a couple of weeks ago, and that is something that could give in a bit of a breather, a bit of a relief to all of these FMCG companies. If the prices go down, they could actually see some uptick in demand. The increase in profits post the corporate tax bonanza could also go into A&P spends, and that also essentially will trickle down to other industries like media, etc. as well in form of a benefit. Let's move right on and talk about the next stock on our radar. It's Dr. Reddy's. Soumya, what's the update?
Well, this company, what we're gathering from agencies, has suspended all shipments of ranitidine products as a precautionary measure following the ongoing probe by the USFDA. In fact, they say that they're evaluating the impact of the potential carcinogenic issue, and they expect to provide some amount of clarity and update on this in the coming days. So that's why we've even seen the stock react sharply on this news, and it's down by over 3.6%.
Well, that's right. That's Dr. Reddy's for you down in trade. Despite the overarching positive sentiment in the market, this one definitely is taking it on the chin today on back of that development. Varun, Ashok Leyland is zooming ahead in trade. Is it because of the Nomura upgrade?
Yeah, Karunya, as you rightly said, Nomura has upgraded Ashok Leyland, citing that the risk-reward is turned favourable, so an upgrade to buy. There's also visibility improvement on a CV revival. This is mainly led by investments, and valuations currently factor in the tough near-term weakness, so the outlook going forward for the rest of the year should be positive.
All right, that's Ashok Leyland for you, up more than 7% as we speak. Another stock from the pharma pack, which is ailing in trade right now, is Lupin. Let's pull that up as well. It's down 3% on back of 3 observations that they've received on the completion of the USFDA inspection on their Tarapur facility. This particular inspection was carried out between September 16th and 20th. It was closed, and the company said that they've received 3 observations, and however, they are confident of being able to resolve it quite quickly, and it will not have a very material impact on the company's performance and growth prospects going forward. But the stock's definitely reacting to that story. Soumya, Reliance Capital, another stock which is tanking in trade.
Well, this one's this is on back of a downgrade by care rating agency, which says that they have downgraded the stock from BB to D, that is default category, and this is actually an 8-notch downgrade coming in. Well, they believe that the company's delay in coupon payments on several entities as the primary reason, and in fact the liquidity condition of the overall group is not really strong. And now with this, Reliance Capital has actually come out with a harsh note on their press release, saying that this downgrade is actually very premature and premeditated and prejudiced as far as this development is concerned. They believe that they had delayed the payment on back of some technical glitch, and they made the payment within very next day, and this should not be treated as hardly as CARE has downgraded the stock by 8 notches, and they believe this will precipitate a chain sequence of events that will gravely harm the entire market and the liquidity scenario. The stock's definitely tanking in trade today, no respite to investors.
More negative news flow coming in for Reliance Capital, pulling the stock lower in trade by 10%. Varun, Axis Bank, on the other hand, is looking quite resilient. What's the quantum of funds that they're raising?
So the raise has been almost completed, I believe, for around $1.79 billion. Now, what a timing for a QIP. The announcement from the FM couldn't have come at a better time. We know banks pay the highest taxes within the system. They're taxed at the highest bracket, especially private banks. So, there should be some significant relief here, and I definitely sense an upgrade for the earnings and book value. In any case, post the QIP, Axis's book value is a lot more attractive now. It's significantly cheaper. Also one of the top picks within the private banking space. So I anticipate, it's up 5% today, so it speaks for itself.
Absolutely. And while, the banking and financial names are looking very, very upbeat today, IT Pack is definitely the one that has not been able to join this party on Dalal Street. Samit is here. Samit, tell us what's the observations on the counter of Infosys. How are you assessing it?
It's a normal phenomena when you see, high beta counters attracting buying interest. You see, defensive like IT, FMCG. They try to take some kind of back seat. So clearly, Infosys, if we talk about stock, has been consolidating of late, and since last couple of days, when you see broader market attracting strong buying interest, we have seen good profit booking in most of the IT counters. So from here on, for a time being, one should avoid being into a defensive counter. So as far as Infosys is concerned, can head towards its important moving average, which is 18 moving average, placed around 750, 740. So we would expect continuation of this underperformance for a while now.
Okay, so underperformance could actually continue going forward. That's the word coming in on Infosys, which is down more than 3.5%. Another stock from the auto index, which is looking quite good today, is Force Motors. It's up 2.5%. And the reason why, despite the fact that GST Council has not been able to offer any relief for the auto sector and OEMs at large, Force Motors is one company which stands to benefit from what were the announcements made on Friday. GST Council had recommended lowering of 12% cess on 1500cc diesel and 1200cc petrol vehicles with a capacity to carry somewhere between 10 to 13 people. And Force Motors, we very clearly know, operates in that particular bracket, in that particular segment, and that definitely stands to benefit because the tax has lowered from 12% to 3% for diesel and for 1% for petrol. So on back of that, we're looking at Force Motor as well, zooming away in trade. Samit, another name from the auto index, but this one is not actually zooming or nowhere close to that, is Tata Motors. Tell us what is your recommendation?
See, unlike other auto stock, this stock is slightly underperforming, but it's a matter of time now. If we look at the overall structure, stock has been consolidating of late, and a couple of weeks back we saw a good bump up in this counter. Stock moved beyond its recent hurdle of 124. Then a consolidation, and stock consolidated around its breakout point of 124. So on Friday we saw a resumption of that particular up move, and today a mild profit booking. But we would interpret this as a good buying opportunity. So this dip can be construed as a buying opportunity. One can go long by keeping the stop loss around 124, and soon we expect the stock surpassing its recent swing high of 137. So stock can head towards 144, 148 over the next few days.
All right, that's Tata Motors for you. Meantime, Soumya, Astral Poly is also another stock that's bucking the overall market trend today. It's down in trade, definitely recovered from the day's low, but what's the update here?
Well, this one saw a bulk deal on Friday wherein 2.6% of the equity traded hands. Well, from among the sellers, we have the promoter entity Soumya Polymers selling close to about 36 lakh shares. And on the buying front, we had HDFC MF buying close to about 6.5 lakh shares at the price of 960 rupees per share. And as a result of this bulk deal, we are seeing a reaction in the stock prices.
Right, that's Astral Poly. It's half time on Market Fatafat. We're going to stop here for a short break, but let's quickly pull up the rise with India's small case index before we slip into the break and see what is the level that the RWI small case is perched at. It's up 2.6%, 553. Wow, very fantastic up move seen on this very index as well. Time for a break. We'll be back with 10 more stocks on the other side. Okay, changing gears once again back to Market Fatafat. Samit, we were talking about IT heavyweights. TCS is another one which is under pressure today. What are your observations on that one?
More or less, the opinion remains same. One should avoid this defensive space for a time being. Stock has been correcting since last 3 weeks now, and has now breached its important short-term support level of 2050. So from here on, we would expect continuation of this underperformance. The stock can head towards the 1950, 1920 over the next few days. So any minor bounce back probably towards 2100, 2150 can be used as an exit opportunity.
All right, TCS for you, it's down 3% odd. Varun, Petronet LNG, another stock we're tracking, it's really sulking in trade. What's the update?
Yeah, well, there's a big piece of news coming out of Petronet LNG where they're looking to invest $2.5 billion in Tellurian's Louisiana project. Now, this is obviously for gas. This investment will earn them an 18% stake in the $28 billion unit. Now, they'll be negotiating purchase of around 5 million tons of gas per year. We know there's a huge thrust domestically on gas and a switch to gas as it's a cleaner and more efficient fuel. Now, there's some concerns around the project execution risks and the timing for which this project will come online, and many brokerages would have preferred if Petronet actually entered into just a pure purchase agreement like they did with Total. This would eliminate them from any fluctuations in the price. They'd also be more subject to Asian prices for gas, and then they'd be eliminated from the execution risks and any delays in the project. So the stock, I think, is sulking today because of those concerns. Nonetheless, it's a huge move for the company.
252 is where it's currently perched at. Moving on to our next stock, which is IIFL Wealth. It's seen a stellar D3 debut a couple of days ago, and it continues that upward momentum very, very strongly. Today, it's up 5% as well. The update that we're focusing on today is the fact that Small Cap World Fund has picked up nearly 6 lakh shares in the company. This was at the price point of 1,334 rupees per share. And that's something that's also adding to that momentum as far as IIFL Wealth is concerned. It's up 5%, perched at 1,400. Sameet, let's talk about another heavyweight. M&M is also another stock which is bucking the trend. It's down by about, it has seen a decent recovery, but it still continues to languish in the red. What's your sense there?
See, clearly in last couple of weeks, the flavor has been the beaten down spaces. Clearly auto has been one of the laggards over the past many months now, and since last couple of weeks, we have already seen some, sign of revival. And this, being the underperforming stock within this space, now we would expect some catch-up rally from this counter. On Friday, we saw decisive breakout happening. Today also, we saw some kind of follow-up move. But again, stock is showing, massive volatility. Stock has corrected sharply from higher levels. But such dip should be used as a buying opportunity, considering the broader degree chart structure. It appears that the tide has turned for all those, beaten down spaces. So we would expect M&M to head higher. Can be bought into stop loss now can be placed around 547, and we would expect this stock reclaiming 600 points.
All right, that's M&M for you. Soumya, IEX, a name from the broader end of the markets, which is looking quite resilient today. What's the news?
Well, this one's definitely gaining a lot of investor interest in the last couple of days or probably months. The latest being Kotak Mahindra AMC buying close to about 60 lakh shares at a price of 120 rupees per share. In fact, recently we also had Amansa Holdings owned by Akash Prakash buying in close to about 3.6% stake in the company. This definitely is garnering a lot of investor interest, and that's the reason the stock's definitely going on an uptick today.
Right. Fund houses definitely seem to be developing interest in IEX and the prospects that the company is likely to offer going forward. Varun, hotel stocks are a bust today. Of course, GST, while it failed to provide any relief to autos, for the hotel and hospitality sector, they've done a decent amount of relief measures.
Right, Karanya. So as you rightly pointed out, there is GST relief for hotels. So you can look at Indian Hotels, Chalet, Lemon Tree, all seem to be showing a significant uptick today. Now, GST on room tariffs has been reduced. This will help the hotels to stimulate demand and also consequently raise tariffs. Now, GST cuts positive for all branded hotel companies, and hotel companies should be able to capitalize on ARR growth going forward. So this will enable them to leverage existing revenues, get more margins out of those while not maybe necessarily not doing more capex. So all in all, really positive for the sector.
Okay, that's Indian Hotels, Chalet, even Lemon Tree. These are some stocks that we're tracking today on back of the GST announcements which were made on Friday evening. Next stock that we're going to talk about is a Cipla. Once again, a USFDA development there, which is pulling the stock lower. The company on Sunday did inform the exchanges about the closure of inspection by the USFDA at their API manufacturing facility in Bengaluru. And following that, this is the manufacturing plant which is located at Virgo Nagar in Bengaluru. The inspection was conducted between July 15th and 19th, and they've received an EIR report indicating a closure of this particular inspection. That's the development which is keeping Cipla also in the limelight. Samit, let's come to you now for our next stock. Stock number 18, D-Mart, which is on a tear today. Is that up move going to continue?
See, clearly, yes. What an excellent wealth creator this stock has been. When the entire broader market was underperforming, was grinding lower, this stock was consolidating, was clearly reluctant to fall. But now, when we see this buying interest getting attracted toward the broader market, this stock, which has been bucking the trend, has now started resumed its high degree uptrend. On Friday, we saw massive bump up, which was followed by a strong 9% move today also. So from here on, this move is likely to extend. Stock can head towards 2100, 2150 over the next few days. But one thing is for sure, the low-hanging fruit is already gone in this case. So in case of a decent dip, one should use it as a buying opportunity. And those who have bought it in this consolidation, they should stay put. From here on, at least another 9 to 12% move is on the cards, at least in the near term.
Very encouraging. That's D-Mart for you. 1900 and counting, up 9% in trade today. Another counter from the pharma space that we're keeping our eyes on is Biocon. Soumya, what's the news?
Not a very positive development. In fact, USFDA conducted a pre-approval inspection at its two new biologics manufacturing facilities in Bengaluru, and out of this, they included a new drug substance and a new drug, a drug product unit, from which they received 4 observations for the new drug substance and 3 observations for new drug product and 1 as a general observation. And stock definitely is trading in red. Mild losses of about 0.6%.
That's right. Thank you so much on that note, Soumya, Varun, as well as Samit, for joining us and helping us talk about and inform our viewers about all the stocks that we are keeping a close track on in today's trading session. With that, we're going to wrap it up on Market Fatafat. But before we do that, quick reminder on what we have in store on the Money Show this evening. Of course, the markets are rallying on back of the big tax reform. But how can you make money from this big bonanza that was announced by the Finance Minister? We will explore further into long-term money-making ideas for you at 5 p.m. today. So don't forget to tune in for the Money Show, 5 o'clock this evening. With that, we're going to wrap it up. Thank you so much for watching.